Hello, everybody. I'm Natalie Brunell. Thank you so much for checking out my show, where I get to hear from the leading voices in Bitcoin, financial markets, political structures, philosophy, and more. Please make sure you're subscribed to the show. And if you're watching this on YouTube, like this video so more people see it and hit that notifications button so you don't miss out on any new content. This podcast does not provide financial advice. It is for educational and entertainment purposes only. So make sure you always do your own research before making any financial decisions and be aware of your risk tolerance. I'm able to produce this show thanks to my sponsors, and I'm very picky about who I choose to partner with. So I hope you'll take the time to listen to the ad reads throughout the show. All right, now to my main partner, Swan Bitcoin. Swan is where I do all of my Bitcoin purchases. In fact, I dollar cost average every single day, not every week, not bi-monthly, every single day. And they have the lowest fees in the space. I love Swan Bitcoin because it is a true Bitcoin only company. Swan has a ton of free educational resources on their website, and they now have a mobile app, which I've been using to smash by some Bitcoin. And Swan Studios produces my new show, Hard Money, which covers the biggest news in Bitcoin and the global economy. It's like an orange-pilled version of CNBC, so make sure to check that out on YouTube for all the biggest headlines, because we are not afraid to question the mainstream narrative. All right, it's time for the show. Thanks for joining me on this special episode of Coin Stories, where I am joined by Nic Carter, founder of Castle Island Ventures. We're at the Texas Blockchain Summit, where I got to interview Nic on stage. So Nic, how are you?
Hi, Natalie. Doing great.
I want to hear your reaction on the whole FTX collapse, because it seems like every single day something new comes out that's just shocking, and even more shocking than the day before. So, lots of developments, and we don't have all the facts straight because, all we're doing is we're in the court of opinion right now. But what's your reaction?
I mean, shock, horror, depression, take your pick. I think it's as I said, I think it's the worst single thing that's ever happened in crypto. And there's been a lot of bad stuff that happened. The loss of trust has been immense, both among retail investors and then just institutionally now. No one trusts each other anymore. The political recriminations are going to be significant. And then it's just a massive fraud that caused potentially a loss of, $5 to $10 billion. So it is a horrible, horrible event. And yeah, every single day brings us a new, fresh set of horrors. Now, apparently, we're learning that the Bahamian authorities were the ones that drained the wallets. So there's some sort of, I guess, like a jurisdictional wrangle going on in terms of who's going to supervise the liquidation. But yeah, it's a very depressing event. It's taking out good firms left and right, firms that shouldn't be failing now are, because they had some direct or indirect exposure to FTX, whether that's venture funds, investors, regular old startups that happen to use FTX as their custodians. So it's a really unfortunate event, and it's going to take a really long time to recover from.
Were you surprised that no one raised any alarms about the conduct of this business before? I mean, how were they able to get away with it for so long?
Well, frankly, the product was very good. That's something that's sort of getting a little bit overlooked, is they did actually create an extremely compelling product. And, it may well have been the case that the purpose of Alameda was to lose money to traders on the FTX exchange to kind of induce them to stick around, right? So the core product itself was good, which caused a lot of people to overlook it. It's also the fact that on FTX International, you could do stuff which you couldn't do on the onshore exchanges. So people were always willing to tolerate a little bit of sketchiness in order to get access to that. And that's just the sad reality of a fragmented system where you have the onshore exchanges that have to operate with their hands tied behind their back, and then you have the offshore exchanges that can innovate and do whatever they want. Mm-hmm. Obviously, that's not a great outcome, so I think some of the blame does lie with the regulators. But yeah, people are now noting that when you were wiring funds to FTX, oftentimes you'd be wiring to Alameda and not FTX, right? It's not even clear FTX ever had a bank account of their own. So, but that's the thing. This is crypto. People do overlook those little orange flags if it means they can sort of like get access to the things they need to. Of course, when it comes to the larger venture funds that invested, there were failures of diligence. Certainly, no question about that. I mean, I'm very curious to see, what that diligence process was, especially for that $32 billion round.
Right. Well, there were those text messages that were revealed on a recent article. Supposedly, he took out a $1 billion personal loan. There's rumors about what was happening in the Bahamas house with, different relationships. I mean, of all the things that have come out, what's been the most shocking or egregious to you?
For me, it's simply the lack of accounting, the lack of internal accounting. I don't think they had QuickBooks, I'm not even sure they used Excel. It appears that all of the capital that was injected into the company, both sort of from the venture capital side and then client deposits, was just commingled in one big slush fund bucket that was periodically dipped into. It's just this cookie jar that Alameda was dipping into, that executives and principals at FTX were dipping into. That's where apparently the political donations came from. That's where the withdrawals were being processed from. It's just an operational catastrophe. I mean, it beggars belief. It's really unlike anything I've ever seen. There's seed stage startups out there that have better accounting than this, $32 billion monstrosity. So that is the thing that actually shocked me the most of all the revelations.
Well, a class action lawsuit has already been filed naming, Tom Brady and Larry David and all of that. Do you think that there could be a potential clawback, especially when it comes to the political donations?
Yes, I think those political donations were illegitimate, right? When you have, let's say, mafiosos or mobsters that have illegitimate streams of income and then they buy political favor by donating that to local politicians, it's not valid or acceptable for those politicians to accept those donations, right? I think this is basically the same. The funds that were used to make those donations, both to Democrats and Republicans, frankly, right? Those funds were not licit, right? They were not legitimately obtained. It's clear now that those were the proceeds of theft. So I don't think any single politician can justifiably hang on to any cent of donation that came from Sam and his affiliates, right? I think it should all be returned. Whether it's a legal matter of a clawback, whether bankruptcy law permits us to claw back, but more to the point, it's just a moral issue. Those funds are rightfully owed to the creditors of FTX, to the people, the retail folks that lost money. It should all be returned, every cent.
My understanding is that they had no Bitcoin. Can you shed any light on that? I mean, essentially they were giving out paper IOUs and no one has their Bitcoin and obviously can't withdraw it or access it?
They probably had Bitcoin at some point. I mean, people would have made Bitcoin deposits to FTX, but I guess they just spent it on stuff. I mean, they have Bitcoin-flavored assets, so obviously nowhere near as good. But for instance, they made massive investments into GDA, which is, in my opinion, the biggest Bitcoin miner. So there are Bitcoin-flavored assets on the balance sheet, but that's no substitute whatsoever for Bitcoin. All they should have been doing is holding corresponding assets exactly matching the liabilities, and they didn't do anything remotely like that. A huge wake-up call for all exchanges now. I really hope there's reform in the exchange space.
We're going to take a quick break from the show to hear these messages from my sponsors. First up, iTrustCapital. Do you save in Bitcoin for your retirement in your IRA? iTrustCapital allows you to invest in Bitcoin and other digital assets with the tax benefits of an IRA. And unlike the stock market, you can buy and sell 24 hours a day. Instead of paying taxes on Bitcoin gains every year, you can defer taxes using an iTrust crypto IRA, or with an iTrustCapital Roth IRA, you can withdraw tax-free at retirement. iTrust recently hit a milestone of $6 billion in total transactions across the platform, and that's $6 billion in tax-advantaged accounts that those 87,000 new IRS agents can't do anything about. The iTrustCapital platform is easy to use and only takes a few minutes to set up. And if you want to start investing with a $100 bonus, head to iTrust.capital/Natalie Brunell. Next up, let's talk about Bitcoin 2023. That is the biggest Bitcoin conference in the world. And take a look at the video from last year in Miami. It was an incredible event that was jam-packed with the best speaking sessions, workshops, and networking events that I've been to in the space. I had the chance to live anchor the Bitcoin Magazine news desk and serve as MC. And it was such a full circle moment for me to be at that conference because the first one I attended was Bitcoin 2021 in Miami. And that's where I actually launched the Coin Stories podcast. I went on a media pass because I used to be a reporter, and I actually went backstage and started asking the speakers like Michael Saylor and Preston Pysh if they would come on my show. And they did. And a year later, I'm back at the conference as someone who actually has a career now in Bitcoin. So you never know what can happen at these events. I highly recommend going so you can meet other people that share the same values and passion for Bitcoin. And if you want your ticket at a 10% discount, head to b.tc/conference and use the code HODL, HODL. I'll see you there.
I really hope there's reform in the exchange space.
Well, let's talk a little bit about that because a lot of people are now calling for proof of reserve. So I want to get your take on that, but also for people that aren't familiar, how do proof of reserves actually work if an exchange wanted to implement one?
So I've been one of the people calling for it for years now with no success, and I'm heartened now, but also disheartened that it's happening under these circumstances. So proof of reserves, there is a nomenclature issue. People think it refers just to the asset side of the balance sheet. Typically, it's kind of a term of art. It refers to both sides, at least the way that I employ the term. Maybe we need a new term. I don't know. But so typically what it refers to is an entity that is custodial, that's holding some third party's coins on their behalf. They do a cryptographic attestation to coins held, which is very trivial, of course. You can sign a transaction or publish a cold wallet address, right? You could publish something in the op return saying, I own this. Then the more complex side is the proof of liabilities, which you want the liabilities to correspond exactly to the assets held, right? And so typically what that means is if you're an exchange, you add up all the user accounts on the platform and you publish a digest, often in Merkleized format. The exact complexity doesn't matter too much. Really, all you're doing is adding up all the user balances on the platform, and you publish an attestation to that. It could be supervised by an accounting firm or unsupervised. Both ways are valid, honestly. And then, as a third party or as a user of the exchange, you can verify, yes, the assets correspond to the liabilities, and I, as a user of the exchange, am included in the liability set, so I know that they're not undercounting the liabilities. So that's the basic procedure. It's nothing new. It's not really that complex. Proof of reserves have existed since 2014. Exchanges did them after Gox. The methodology has been refined and improved. In 2021, BitMEX came out with a new kind of set of methodologies and code. Kraken came out with a new proof of reserve early this year. And now everyone is apparently doing it. I'm holding my breath a little bit because I want to make sure that they follow through on their promises.
Right.
Most exchanges have not actually fully carried them out, but they have indicated their desire to do it, which I think will be immensely positive and would regain back some measure of trust.
Yeah, I saw all of the announcements put out. I mean, there have been emails going out to customers saying, don't worry. I think Coinbase ran some sort of newspaper article saying, trust us, or you can trust us, or something like that, but you don't have to. Yeah, but you shouldn't have to is what they're putting out. But
they never did a proof of reserve, Coinbase.
Okay,
I asked Emily Choi about it, and she said, well, actually, we are a public company with audited financials, and so that should give you a sufficient measure of trust. I think that's fair to say. However, it's not very crypto native. I think they should take advantage of the fact that these assets are on the blockchain, and that I think they should be normalizing this kind of behavior so that, and really set the standard.
Yeah.
So I don't think it's really sufficient to rely on SEC disclosures, Well,
a lot of people are worried about contagion. It's almost like which domino is going to fall next. And a lot of people have been pulling their Bitcoin off exchanges. We see a record number now in cold storage. What are your biggest concerns when you look at the market? I mean, people raising flags about different exchanges, but also different lenders, banks like Silvergate. What are you seeing?
Yeah, certainly the lenders I'm concerned about. A lot of the lenders did revisit their relationships with Alameda post the summer events. So I give a lot of credit to the lenders that were able to do that and kick Alameda off the platform. That actually did happen, believe it or not. But yeah, there are certainly lenders out there that are probably distressed, and we don't know the full extent of the damage just yet. Something like an FTX doesn't disappear overnight without leaving a hole in certain balance sheets. On the exchange side, I also do think there's more dominoes to fall. I think the liquidity of all these exchanges will be tested. And if they're not fully reserved, then they're going to have a shortfall, right? If there's enough withdrawals. So, even Sam himself said it. He thought lots of exchanges were secretly insolvent. Turns out he was referring to his own. But, there's probably others out there, especially the offshore ones. I think this is really going to just drive home the division between the onshore, more regulated exchanges and the offshore ones. And so I do think within that offshore cohort, there will be most likely additional failures. Hopefully it's none of the large ones. I think Binance probably will be able to pass their proof of reserve. I would like to see them carry it out, though, and stop just talking about it and act. But yeah, I don't see the contagion ending anytime soon. This is really just a continuation of what began in spring, summertime.
I don't know if you have a take on this, but some people have been sharing these conspiracy theories that there's no way that this guy could have gotten away with this without some ulterior motive, and ultimately it's going to drive us all to CBDCs. I mean, people take it to an extreme, but do you have any response to people who feel like there's no way that with the amount that was essentially defrauded from customers and the fact that there were political donations involved and massive investors from the legacy system, that there wasn't something more nefarious in play?
Yeah, I mean, do I think Sam, was like his agent sent to discredit the crypto industry? Probably not, but he did do a very good job of discrediting us. So even if that wasn't the intent, it worked spectacularly well. I mean, I guess I buy the, basic interpretation, which is they ran an incredibly shambolic exchange with no controls, and they had a reckless disregard for how a company should be run and a disregard for client funds. And I do believe that they justified it with this arcane philosophy of effective altruism. I mean, it seems like Sam and Caroline really did subscribe to this idea, which is basically utilitarianism, which is the idea that, the moral worth of actions can be evaluated based on the whole aggregate set of consequences, right? And so if you think there's maybe a really good outcome down the road based on your initially maybe upfront bad action, you can justify it under that philosophy, right? They seem to really believe in this.
Yeah.
And so maybe they were simply justifying what amounted to fraud by thinking to themselves, well, we're going to end up donating a lot of this money to AI safety or like great causes, mosquito nets or whatever. So it's sort of okay that we're like defrauding, Westerners or whatever a little bit, if we can achieve these great outcomes. I think that's my best explanation, is that they unironically, earnestly believed in this lunatic philosophy.
Yeah, I think that they were secretly just hoping and praying they don't get caught before the next bull run, right? Because they could recover a lot of this if Bitcoin hit a certain price target. And obviously the collapse is putting a lot of downward pressure on the price, but also we were here at Texas Blockchain Summit talking about mining. So there's another component, because a lot of Bitcoin miners are having liquidity and solvency issues because of how much debt they took on, some of them using ASICs as collateral. Can you talk a little bit about, Bitcoin mining economics right now?
We're going to take another quick break to hear these messages from my sponsors. First up, Fold. Fold is the best Bitcoin rewards debit card and shopping app in the world. You can earn Bitcoin on everything you purchase, from Amazon to your groceries, with Fold's Bitcoin cashback debit card, and win free Satoshis every day, or even a whole Bitcoin by spinning the daily wheel and the purchase rewards wheels. I actually have an alarm set every single day so that I never miss out on spinning the daily wheel and earning free sats. And, I have to say that Fold is one of the best ways to get someone completely new into Bitcoin, because they can start earning it and learning about it and using it. So if you want to sign up and join the fun, head to foldapp.com/Natalie for 5,000 in free sats. All right, now I want to tell you about a company called CrowdHealth, which is a Bitcoin-enabled alternative to health insurance. Because let's be honest, the government and insurance companies have jacked up prices. They've made things super complex. And when you send your money in, it essentially goes into the health insurance black hole, and then you never see it again, even if you don't get sick and you don't need medical services because, you don't eat fiat foods. But then if you actually do get sick or you need care, you have to send them more money because something ends up not being covered. The great news is there's now an alternative brought to you by Bitcoiners, and it is called CrowdHealth. It is very different from insurance. Instead of sending your hard-earned money to an insurance company, you hold your money in an account that CrowdHealth helps you set up. And you can even convert the dollars in your account to Bitcoin. Now, the company is all about community. Remember, it's called CrowdHealth. So when someone in the community is in need, needs care, needs help, you can choose to actually use the money in your account to help them, or you can keep it in your account. And if you ever leave CrowdHealth, you can take the money that's left with you. If you want to learn more and sign up, you can head to joincrowdhealth.com/Natalie. Now back to the show.
Can you talk a little bit about, Bitcoin mining economics right now?
Well, there's a quadruple whammy for Bitcoin miners, and you never really want to hear something like that, but there's 4 things that are going wrong. 1, energy prices went up, and they weren't all on fixed rate long-term PPAs, right? It's kind of like a mortgage, If you're on a variable rate mortgage and interest rates go up, you're in trouble. That's kind of the same with energy and miners. So that happened, so their cost side went up. The price of Bitcoin fell precipitously, around 70%. That doesn't help. A lot of them had reserves in Bitcoin too. A lot of miners' objective was to get gigalong Bitcoin as opposed to just running a fiat business. So that hurt them a lot. Next thing is interest rates went up, so financing costs went up. Last thing is hash rate went up. Other miners came online globally. Some Ethereum mining farms were converted into Bitcoin mining farms. You can see a massive spike right after the merge as this happened. And new ASICs came online too. So that's really four things which are attacking miner margins. Most miners are currently mining unprofitably. The public miners had a really perverse incentive, which was to grow their hash rate under management at all costs. And that really put them in a bad spot because they typically took on a lot of debt to do that. And of course, if you're highly levered, interest rates go up, your cash flows deteriorate, your Bitcoin treasury falls, you get plunged into insolvency, and that is what we've seen. I expect of the public 25 or so public mining companies, in 18 months, that might consolidate down to fewer than 10.
Wow.
So really a tough sector. No one's talking about it with the FTX thing, but actually it's kind of a horror show in the mining space.
Right. Well, one of the concerns with a consolidation, wouldn't that be, more centralization potentially because there are fewer mining companies?
Yes, that is actually something I'm concerned about, is when you do see these consolidations, these capital cycles playing out in the commodity sector, you see the fewer, larger, more well-capitalized, more sustainable firms buy up their failing or failed competitors. And so I do expect to see M&A and consolidation, and I do think there will be fewer large miners in the U.S. kind of 12 months from now. I mean, is it fatal for the industry? No, but it's kind of the wrong direction for things to be going.
And do you think that our country, with what they're doing in terms of, their response to the energy crisis, is basically, let's keep going on this green initiative, ESG, we basically need to leapfrog fossil fuels and go straight to solar and wind. Are we making a mistake? And is Bitcoin mining able to, pick up some of that slack, essentially, because it's driving, economic incentive to renewable energy?
Well, yeah, I mean, I do fundamentally believe in decarbonization and ultimately green transition. I think the path dependency of how you get there really matters, right? So if you rush it, you can end up in a kind of Germany type situation where you have to backtrack heavily and then turn on coal and things like that. If you don't include enough nuclear, you're going to be in trouble, right? You can't run a grid on variable intermittent renewables. It just doesn't work that way. We probably don't have enough rare earth metals in the ground to make sufficient batteries to run a grid just on wind and solar. So the path that you take to get to that more decarbonized grid totally matters. If you look at the trend in this country, it is leaning into wind and solar very heavily. The Inflation Reduction Act was kind of a landmark act, creating many more subsidies for renewables. That means that there's going to be a lot of kind of misspent funds, in my opinion. I think a lot of that is a misallocation of capital. Weirdly, it does play in the hand of miners that are looking to use sustainable sources, because it means there's going to be a lot more stranded wind and solar. A lot more of those hours of generation are going to be negatively priced. Miners thrive on that, right? That's what all these miners out here in Texas are doing. The Texas grid has more wind than any, as a percentage of generation, than any specific subcomponent of the U.S. grid overall. So I think it is actually going to work to the benefit of miners that are looking to use renewables, but the underlying context is not a good one. It's that we're spending funds on less reliable renewables that could maybe be put to better use elsewhere.
Has the White House responded to your commentary on their White House report on the climate impact of Bitcoin mining?
They've not reached out to me directly. I have heard that the individual responsible for most of the report considers me a climate denier. So to be clear, I do not deny the climate. I accept that there is a climate, But yeah, I don't know. They haven't engaged. I did give a talk at the White House maybe about a year ago. I presented a lot of the slides that I shared at this conference last year, actually, and they didn't really take any of that into account. So that is part of the reason why I was so rankled by their report. They weren't really engaging with the industry. I mean, it's fine for them to rely on critics. I think they owe it to us to also rely on the industry. You can accept and acknowledge that maybe both parties have a particular bias. you should probably take into account some of the things that the industry is producing. A bias doesn't mean that the data is wrong or that the analysis is wrong. But yeah, so far no engagement. It's fine with me. The point of that was just to show that we probably have a better command of the facts than they do.
Well, Nic, you do such great research and analysis in this space. Just to close up, last question for those out there that are just genuinely worried. Maybe this is their first bear market. Maybe they went through some others, but things look a little volatile and scary. What do you say to them?
Well, avoid leverage, first of all. That's how most people in funds blow up. Second of all, if you don't trust the exchange or custodian you're using, withdraw your funds. Learn a little bit about self-custody. Do it responsibly, of course. But take your coins into your own hands, basically. Yeah, I mean, things look grim and bleak right now, but the core principles underlying this movement have not gone away. They haven't become any less important. If anything, the legacy financial system is in a worse state than ever. So my enthusiasm for Bitcoin is unabated. I know things seem really tough, but we have seen it before, and yeah, the underlying sort of ideology and the reason why we do all this is still here.
All right, thanks so much, Nic.
Thank you.
Thank you so much for checking out this show. Again, make sure you're subscribed so you don't miss out on any new content. And I love to hear your feedback. Leave a comment or send me an email at natalie@talkingbitcoin.com. Let me know what you think, if you have guest suggestions, and I'll see you next time.